Good evening, future Maryland home buyers. Thank you so much for being here. My name is Jackie Muick, Consumer Advocacy and Website Manager for Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is Nikki Dade, a realtor with Homestart Realty, Steve Govia, a lender from New America Funding, and Catherine Kimmer-Dale and Frank Bamunde from Maryland Department of Housing and Community Development, also known as DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees in the next 2 business days. You are more than welcome to take notes, but I promise you will get all of this information after the fact as well, so you can sit back and enjoy. We encourage your questions, and we are going to be looking forward to answering them. We will have sections for Q&A at the end of each presentation and a larger one at the end of the full webinar. So please post all of your questions in the Q&A box below, and we will get to them when we get to those Q&A sections. And with that, I'll turn it over to Nikki.
Thank you, Jackie. First, I want to thank the committee for hosting and organizing this educational webinar and monthly webinar series. And for the prospective consumers, thank you for showing up for yourself. So I'm going to go off camera so that you can focus on the presentation, and I'll come back on when it's time for Q&A. So again, my name is Nikki Dade. I'm a realtor and real estate investor, excuse me, and licensed in Maryland and DC, as well as a certified housing opportunity specialist and member of the Maryland Home Ownership Advisory Board. I'm collectively invested in 149 doors across 3 properties, and I am passionate about helping individuals and families use real estate as a wealth building tool. But most importantly, I am a mom, and that's one of my most important jobs there. Now let's grab a pen and paper and let's get started. So why should we buy in Maryland? Maryland has a variety of options in real estate. Cozy starter homes if you are just entering the market, and if you are looking to sell your starter home to purchase your forever retirement home with land. We have homes to fit either consumer needs at any price point. We have a strong economy with a thriving job market, healthcare, technology, and education. And the most important part, we have a variety of down payment assistance programs focused on increasing the footprint of home ownership in Maryland. My colleagues here will talk more about the Maryland Mortgage Program later in our presentation. As a designated housing opportunity certified realtor, my job is to educate consumers on the workforce and affordable housing finance programs to prospective customers, and you will always find me where the money resides. How do you purchase? First, start off by enrolling in a home buyer's educational course. You show up like you did this evening to a credible home buyer webinar and workshops, just as you did tonight. Research. The internet is informative. There is information overload. You want to read. You want to talk to family and friends about their path to home ownership when they purchase their home, if they sold their property, top lessons learned, advantages and disadvantages. Then you want to walk and drive the neighborhood. Start familiarizing yourself with the inventory now so you can gather intel on the neighborhoods, the price points, but most importantly, you want to see yourself there. Next, you want to work on your personal qualifications. Income is important. Once you've gathered your intel on the market, you want to assess your income to see how much you would be comfortable paying in a mortgage payment. If you're already paying rent, in most cases, your mortgage could be lower than your rental payment when everything aligns. Your savings. Don't worry about it if you don't have anything in the bank now, but you really should start today. Your retirement account is also a resource. Did you know that some retirement accounts will allow you to borrow against them and take a loan to assist with your down payment and closing costs? But last, but most importantly, you want to know your numbers. Check your mortgage scores, not your FICO 8. 2, 4, and 5 is what your lender uses. Maintain visibility throughout the process, because if you don't know where you stand, then how will you know if you're lendable? If you're not tracking those scores, you want to make sure you sign up for something that will help you assist in tracking those scores, such as myfico.com is one that I highly recommend. Now that you've gauged your personal inventory, it's time to assemble your dream team of experts. Start with the same family and friends. Ask for recommendations of realtors and lenders that they've worked with. You want at least three. Schedule a buyer's consultation or a 15-minute discovery call. Vet them fully. Ask tough questions. Who is your typical client? What value do you add to the process? What is your commission? How do you handle tough situations when they arise? Because this journey is going to be difficult and there will be bumps in the road. It's really not for the faint. But I can assure you, anything that's worth having is worth working for. You also have to understand that while you are interviewing and qualifying these professionals, they're doing the same with you. And everyone's not going to be a good fit, but there's someone for everyone. Don't be afraid to ask where you can look at reviews of previous transactions or someone that they will be willing to allow you to talk to. Lastly, do a quick Google search and see what comes up. You will be surprised. Technology is amazing. So, phase one, you've already done that. You actually started the preliminary process when you found a realtor. Now you're working with a lender. Your realtor and your lender should have a team of experts that will assist you through the entire process. Next, you want to schedule your buyer's consultation with your realtor. Drum down the specifics, assets, your savings, how you're going to cover your EMD, your inspection costs, your appraisal costs, upfront out-of-pocket expenses, your credit scores, which I mentioned before, your mortgage scores. I want to keep drilling that. 2, 4, and 5. What's your timeline? Requirements of your dream home. Finally, you sign the required broker agency forms with all the agreed upon terms, commissions, and etc. Now you are officially a client by a customer where we have a fiduciary responsibility to you as a client. Next, we will refer you to our preferred lenders in our network for you to select who you would like to move forward with. Then you can obtain your pre-approval, not a pre-qualification, where all of your assets have been verified by your loan officer. You will need this letter when submitting offers to your prospective home, on your prospective home. The sellers want you to know they want to know, if you are a viable buyer before they accept your offer. And then the fun part comes. We're going to go shopping. Your realtor will create an account in their portal where you can view the inventory, and we select the properties based on your needs and terms to tour and decide if you want to submit an offer. You love it. Okay, now we're going out. Your realtor goes to work. We decide to submit a strong offer with a pre-approval letter, your EMD, and any required inspection contingencies, and any remaining requirements to help us seal the deal. The negotiations start. The seller may accept an offer, or they could return with a counter offer with different specified terms. Once all the terms are agreed upon and accepted, we have a fully ratified contract. The contract is then forwarded to title with your EMD. We also copy your loan officer, and all parties return copies to their respective brokerages, and then the clock starts ticking. Now we're ready to negotiate. Now we schedule the inspection. I want to mention the inspection is for the buyer. This is not required, but I highly recommend it. Normally, this is done in 3 to 7 days. Once the report is returned, if there are any additional negotiations required, perhaps they may need some gutters or something slightly adjusted, or expansion tanks need to be added to the hot water heater. It could be a number of different things. We go back to the seller with an inspection notice detailing the requested repairs. They agree to the repairs with a timeline for them to be completed. Once they are done with all the required repairs, they will notify the buyer with any documentation that was agreed upon, is signed off on, and now we are officially under contract. In the interim, the lender schedules the appraisal. Now, this is a mandatory requirement to the lender. While title is conducting the search to ensure you receive a clean title and there are no issues with the previous owner that will come back to bite you, such as the water bill being paid or any tax liens, you're going to go through underwriting at the same time. The lender orders the appraisal to ensure the property is worth the amount of the loan. At this time, we receive the value and find out if there are lender required repairs. These must be completed for you to receive the loan. Please note that there are two instruments to obtaining ownership of a home. It's your title, which is the deed to your home, and then your mortgage is a financing instrument. You can be on the deed of the home and not be on the mortgage. So you have equitable interest in the property, but no financial obligation because you are not on the mortgage. The appraisal comes back. It's at value. At the completion of the underwriting process, you receive your financing commitment with all of your conditions removed. Last, your title is cleared and you receive what we love to hear. You are cleared to close. Now it's time to close. You obtain your funds for closing. You schedule time with the title company to sign your closing docs. We schedule a final walkthrough before your closing day. The transition of the utilities happen. We schedule movers. Once you sign for about an hour, yep, it's about an hour. You sign your life away. Just kidding. Then you receive your keys to your home. That's the entire process in a nutshell. I always love to encourage my clients to be as creative as possible when financing their home. So the goal is to collect as much money from outside resources while using your money as leverage and collateral. This is where I share some of my tips and tricks where we use them as real estate investors. So there are two real live examples here of home ownership that can be used as a wealth building tool. In this first example, my client leveraged the Maryland Mortgage Program, one of my favorites. They also had seller concessions and other available resources to purchase a home with very little money out of pocket. As you can see, they walked away with 3K in their pocket. In the second example, my client used a house hacking strategy by creating a separate entrance and renting a portion of the home to help offset housing expenses while he was building equity. Every client situation is different, but the key is having a strategy that aligns with your goals and your financial situation. So whether you're a first-time home buyer, you're a move-up buyer, or you're a future investor, preparing is the right preparation, is the right guidance and can make all the difference. If you'd like to continue the conversation, learn more about the options, or discuss your personal goals, feel free to connect with me using the QR code, and I'll be happy to answer any questions that you may have.
Thank you so much, Nikki.
You are welcome.
All right, that was a wealth of information. I
A
mean,
lot.
we all know that there is a lot of steps in the home buying process. One question that I wanted to ask you, and please a reminder to all of our wonderful attendees, if you have any questions, please put it in the Q&A box and we will get to it. You went over that the seller can counter your offer on their home.
Mhm.
What's the next step if you were to receive a counter offer?
I always tell my clients now it's time to negotiate. Now it's time for your realtor to really earn their keep. So for me, I always sometimes your buyer can get a little bit discouraged because they're thinking, oh, we've gone in with a strong offer. So why is the seller now countering? Well, we have to also understand that the seller wants to, excuse me, to win as well in this situation. So I always try to find a nice middle ground for everyone. I said, this is the time where we can negotiate the terms and get back the deal and we'll be okay. And typically we meet a middle ground. I've never had an offer where I had to pull it off the table, ever.
Outstanding. So a buyer can counter a counter offer.
Yes, we can. That's the fun
Outstanding.
part
Oh, yes, definitely. Definitely fun, not nerve-wracking at all.
at all. Never get rattled. Never get rattled. That's the time. It doesn't mean no. It means if you answer some of the issues that they may have, now you can get a yes. So I always try to figure out what is it that they need? How can we solve for it?
Outstanding. And then one more question, and then we'll move on. And Nikki isn't going anywhere. So if you have a question and Steve's getting going, and you're like, oh, I should have asked Nikki this, put it in the chat, and we'll get to it at the end of the webinar. Um, there are so many realtors in the state of Maryland, Nikki. How would you recommend someone find a realtor for them to work with on their transaction and that they can trust?
Exactly what I said. Schedule time where you can actually interview them, ask them the tough questions, ask them to see, who you've worked with, if they would mind you talking to other people, do the research on what they've done, figure out what markets they're actually working in, how many transactions have they closed, in that maybe last 3 months or so. How did the deals go? All the things. You just want to, again, have an interview. And I would always suggest talking to more than one person to figure out who's going to be a good fit for you. If your personalities mesh, go for it. You always have to trust your instinct. Now, what I will say too is, even if you decide to move forward with someone and it's not working out, understand that you have terms in that agreement where you can get out of your contract. You can request to get out of your contract. People now have reservations with moving forward with signing our broker agreements. And it's something obviously that we have to do now, before we can even take you out at this particular point. But I always encourage my clients and tell them, listen, it's right here. If this isn't working for you, these are your terms for us to end the contract. So you have nothing to be worried about.
Awesome. Thank you so much, Nikki. All right. And again, Nikki's not going anywhere. But for now, we're going to hand the mic over to Steve
Thank you.
and learn a little bit more
Awesome.
about lending. Thank you again, Nikki.
All right. Well, thank you everybody for having me today. I am,
Steve, we're still seeing the presenter side of your
oh,
slides.
I'm
Is that all
sorry.
right?
I'm going to switch, I hope. I'm doing this. I'll try to switch screens. I had a problem earlier. Start. I apologize for my technical issue here. I'm going to close and
You
start
are all
again.
good. Zoom is great until it's not.
Much better with mortgages. Okay, there we go. Maybe just do it this way. This is not ideal, but it'll get us going and allow us to go through the slides. And you should be able to, um, let's see. Break my slides.
Is there anything we can do to help, Steve?
I don't know. I can't. I apologize. This is embarrassing. I can't even get it to open now.
Oh no.
Um, Hold on. I'm gonna go to the
You
slideshow I
have a
sent you guys.
question, Jackie, if you wanted to take that while he works out his kinks.
Yeah, we could do that. All right. So, for anyone who would like to answer this question, what are the pros and cons of using a VA loan?
So one of the pros is you need no money down, and that allows you to basically the only cost you would have is closing costs, which you can use different down payment assistance programs to cover for you. So many times veterans have no money needed to close. Additionally, with a VA loan, you're allowed to pay, the seller's allowed to help you be able to qualify for the mortgage from a debt to income standpoint. And what that means is they can pay off some of your debt to help you qualify. I've actually had a VA loan recently where the seller paid off the buyer's car so they would qualify for the mortgage. It's one of my favorite loans because there's so much flexibility with a VA loan.
All right. Well, Steve, if you are still not able to get yours up, I am able to get it up on my end.
Oh, that'd be great.
All right.
Thank you. I
Sorry
apologize.
about that. All right. You won't be able to see your notes, and you'll need to let me know when you want to hit next slide, but this
Okay,
works for
perfect.
now.
Thank you. All right. Sorry, everybody. But this presentation, in this section, we are going to learn how to prepare to buy a house, what lenders really are looking for when you're getting pre-approved, some common mistakes to avoid, and really the whole process from start to finish. Uh, you want to go to the next slide? So buying your first home, like the biggest myth to this that I hear are I need 20% down to be able to buy. That is absolutely not the case. There are loans where you have no need for any money out of pocket up front. You can do as little as you want down, 0%. It's common for us to see 3 to 3.5% on the loans that people are utilizing today. So you don't have to wait. If money is your issue, don't wait. Start looking at what options are available for you because you'd be surprised how many different ways there are to purchase a home today with very little money in the bank. Next. All right. So why should you get pre-approved? Right? First thing to understand is your actual buying power. It's going to tell you, your pre-approval is going to tell you where you should shop, what your monthly payment is going to be to make sure you're comfortable with that and to see how it's going to affect your life, the way you spend money, the things that you do. So we want to make sure that you know your buying power so you're shopping in the right market. You want to know your monthly payment so you're going to make sure that that's going to be comfortable for you. And you don't want to go see a house that's outside of your price point that you're comfortable with because you're going to see a house that's, let's say, $500,000, but you only can afford a $300,000 house. Not the ideal situation for yourself or your realtor because you're basically going to put yourself in a position where the payment's going to be way too much for you. You're going to be house poor if you were to buy that. We want to make sure that you're really confident going in, that you're super comfortable, that the payment isn't going to take away from the joy of the home itself. So if you buy a house and you can't afford it, you're living there, it's a trap, and that's not a trap that anybody wants to see you in. So getting pre-approved eliminates that problem, and it allows you to know what you're getting into prior to shopping. Today, it's a requirement of every quality realtor. So if you meet a realtor who doesn't ask you for something like a pre-approval, they're probably not someone you want to be working with. Next slide. Pre-qualified versus pre-approved. So this is something Nikki spoke to briefly. Pre-qualified means that you spoke to a lender, you gave them an idea of what your income is, an idea of what your credit is, and that can give the lender the opportunity to say, you're probably approved to this level. What we prefer people to do is actually get pre-approved. That requires you to take some actions. Sending in your income documentation, pay stubs and W-2s, sending in 2 months of bank statements so we can make sure you have the resources to purchase a home, because there are some upfront costs. Making sure at least a soft pull is done with credit. A lender isn't required to pull what's called a hard pull or a tri-merge credit report at the beginning. We can do a soft pull that doesn't affect your credit score in any way, but gives us enough information to know what you would be approved for. There is another step after pre-approval, which is called underwritten pre-approved. That's when a lender takes your pre-approval and actually sends it into their underwriters who sign off on the loan. That's the best way to prepare. It also makes your offer stronger, because when we send that offer in, we're literally sending a commitment to the seller's side. And that is an elevation over just a loan officer saying you're approved. Now the bank itself or the lender themselves, the company, are saying this person's ready to go. The only thing we would need in that scenario when you go under contract is an updated pay stub, updated asset verification, an appraisal, and title. So it's very similar to a cash offer. And that's what we try to do with all of our buyers, because it gives you the strongest position when making an offer. Next, please. So what do lenders look at? We're going to look at income first. That's the most important thing. Your ability to repay the loan is the most important thing to me, because there's categories that we classify buyers in. The first category is the mortgage will not affect your life in any way, which is the ideal place to be. The second category is where most Americans are. 50% of us are in a position where our income ratios are allowing us to purchase a home. We have to pay attention to our bills. We can afford the mortgage. We can go to dinner. We're going on vacation and saving for retirement, but you're not eating at Ruth Chris every night. You're going to like middle America. Most people are in that category. There is a third category where what I tell my buyers is, if you love ramen noodles and hot dogs, that's the house for you, because that's all you're going to be able to eat. We use those types of income ratios where the payment's that high when there's alternate income coming into the house that we're not counting. So sometimes we will go higher than what you might think would be smart from an outsider looking in, but there's a reason for it. So income's the most important because it's going to impact you for the longest period of time. Credit's the second thing that we look at. Credit is the least important to me because we can fix credit. We work with people with credit scores as low as 500, which is pretty low. But I can help people with even lower credit increase their scores and be able to be financed. So credit, everybody in my 25 years in this business, at some point, everybody's had a credit issue. And you're allowed to make a mistake once in your life. You're not going to be punished for that forever. But if you're in a position where your credit's lower and you think you need it to be much, much higher to qualify, that's not the case. We will work with you to help you repair credit or improve credit. Even if your credit's exceptional and a little bit more would even make it a better loan for you, we'll show you ways of doing that. Assets are making sure you have the money you need to get into the house. So there are a few upfront costs. One is the appraisal. The appraisal is done by a third party. They're anonymous to the lender to some degree, meaning we don't select the exact appraiser. We use a panel and it's rotated through the appraisers in that panel. So we can't influence what the value comes back as. We want it to be based on other sales in the area. So that's an upfront cost, typically around $500 to $600, depending on what county or where you are. The other out of pocket is a home inspection. We love when people get a home inspection. It's not a requirement to your loan, but it is a true inspection of any major repairs that could be needed to the house. They'll inspect the roof, they'll inspect plumbing, they'll inspect literally top to bottom the entire house. Takes a few hours. When you have an appraisal done, it takes a few minutes. Okay. The last thing that we look at is employment. Now we look at stability. One of the misnomers is I just started a new job. I have to wait a year or two to be able to buy. That's not the case. We don't care how long you've been at your job that you're at today. What we look at is a 2-year history to make sure you've worked for 2 years. If you're right out of school, then school counts as work history. So income and employment are important, but there's usually a way to work through that, even if it's a short term on a job. Next slide, please. Okay, credit score. We're going to talk about this for a minute. What matters most are making your payments on time. Really, what drives your credit score the most is how long you've had your credit. So if you have a credit card and you've had it for 5 years and you've done well with that credit card and you haven't exceeded 50% of the limit of the credit card, you kept it at 50% or below, that's going to help your credit score the most. Keeping those balances lower helps your score more. If you max out all your credit cards, that's going to do damage to your credit. You want to avoid new inquiries when you're starting to go into the buying process. Don't buy a car right before you buy a house, right? That would be a mistake because now you have new debt. It's going to affect your ability and your power when you're buying. Once you're under contract, it's even more important not to change your credit. You don't want to buy furniture for the new house until you have the keys. You don't want to open new credit cards while you're under contract because it can affect everything that you're doing. And the lender will always find out. So don't test them because they're going to know. What I tell my clients is call me before you do anything. Don't pay anything off. Don't do anything crazy with your finances without talking to your lender because we'll guide you through that. And in most cases, if there's some big sale on a couch that you have to have, there's a way to get that without jeopardizing the purchase of your house. Next slide. Okay, total cost depends on your unique situation. So we talked about a VA loan and the benefits, 0 money down. The problem with a VA loan is you have to be a veteran. But there's other loans that allow for no money down, like a USDA loan would be a product like that. Conforming loans are loans that conform to the guidelines of Fannie Mae and Freddie Mac. Those loans are as little as 3% down. And then, of course, FHA loans are a very common government loan that is their minimum down payment is 3.5%. That's your first cost that you want to consider. How much money do I need to put down? And there'll be choices for you. And every choice has a positive and a negative with it. If you put less down, your payment's going to be higher. If you put more down, your payment's going to be lower. There's different parts to that is unique to each buyer. Your closing costs are a second cost that you have to consider when buying a house. So it's not just down payment, it's down payment and closing costs. They're separate items. Closing costs consist of title costs, transfer tax, lender fees, and government fees and points. So you have the option of controlling the closing costs to some degree with the houses you buy. The biggest costs typically are factored into the taxes of the house you're buying. So when we set up escrows for your house to pay the taxes and insurance, that's one of the bigger costs. Taxes are also something that affect your monthly payment the most, more so than interest rate. So you could look at a house that's $400,000 and the taxes are $10,000 a year. You could also look at a house that's $500,000 and the taxes are $5,000 a year, just because of where the house is. The $500,000 house with the lower taxes will probably have a smaller monthly payment than the less expensive house. So you want to consider that when you're looking at the houses that you're going to go see. You want to have your lender explain the cost before you even see the house. So typically a buyer will call me and say, I'm going to see this house tomorrow. I'll send them a worksheet, which will break down the cost, that the money they'll need for closing, and also what their monthly payments are going to be, so that they're comfortable before they even go. The last cost is your homeowner's insurance. Homeowner's insurance is the coverage you need in case a tree falls on your house catches on fire. It's insurance just like car insurance. It protects your house, the property itself. It's something you shop for. It's required on every mortgage. And there are many different companies out there that can help you get insurance. The lender can also help guide you through that, as well as your realtor should be able to refer you some names and people to talk to when you're shopping for insurance. So those are the things you want to think about when you're purchasing the house, where the money's coming from to take care of these items. The next slide, please. All right, so here's the process in 7 steps. And really, when you're thinking about buying a home, the first step should be to call a lender, because they're going to lay out all of the monies that you're going to need, and the payments and the price point, so you're shopping in the right price point. Going to a realtor with that information is power. So the first thing you do is you get pre-approved. It requires an application and a few documents. Then once you're pre-approved, you're going to start your house search. That's the fun part. You find a house, you're going to submit your offer, your realtor is going to negotiate on your behalf, and they're going to try to get the house at the price you want to pay. Your loan application is technically done when you're working with us, because we do that as part of your pre-approval. Then once you're under contract, we send the file into the underwriter. They confirm what we've done, and usually condition for 1 or 2 things, maybe an updated pay stub or a retirement account for reserves, something like that. Then there's an appraisal done at the same time as the underwriter's working on the file. Once the appraisal comes back and there's no issues with repairs on the appraisal, and title's back, the file sent back to the underwriter to be cleared to close. Typically, the process takes 30 days. Sometimes it's more beneficial, your offer's stronger if you can go faster. Some lenders can do these things in 15 days if need be. But it's a team effort. You have to participate with the lender to getting the docs that they request quickly to them, answering any requests of the realtor quickly, because once you go under contract, there's a clock involved, and we want to hit the deadlines timely, and that requires you to participate. Next slide, please. What's the right time to buy? The best time to buy is when you're ready. There's a reason you're on this call today, and that's because you're ready. It's scary. Most people are nervous, especially if it's the first time they're buying. But I've bought 4 houses in my life, and the last one was just as nerve-wracking as the first one. and I do this for a living. So we understand there's stress and there's fear involved with most people. Getting the facts is the smart thing, and that's what you're doing today. So my suggestion is to continue this journey, find out what you're prepared to do from a qualification standpoint, and like Nikki said, get all your questions answered. Research, ask questions, get your answers so that your confidence builds. Because when you know what's coming next, you're going to be much more confident. It's going to be a much smoother process, and it's going to be a lot of fun. And that's what it should be. It should be an exciting time. Next slide. 3 things to remember. Start early. Don't wait. Start now. Ask a lot of questions. And then your team is important. A realtor with a great reputation is important because other realtors want to work with them. So when your offer comes in and it's the exact same as somebody else, if your realtor has a great reputation, you're going to win. If your lender has a great reputation, I've worked with this person before. I've seen their pre-approvals before. They always get the loan closed. That's the reputation you want your lender to have. When you see that, you'll know the other side will know, okay, Steve's pre-approval. I can't wait to work with him again. So those are the things that you really want to remember when you're going through this process. Start early, ask questions, and have the right team around you. Appreciate the time, everybody, and I apologize for the technical difficulties that I had. Let me know if you have any questions.
All right. Thank you. Thank you. We do have one question currently in. And again, please, if you have questions, put it in the Q&A chat at the bottom of your Zoom screen. Our question right now, Steve, is do VA loans cover closing costs, or is that a myth?
So you can have a VA loan cover your down payment, not necessarily your closing costs. Closing costs are a separate item. With a lot of VA loans, I see today even seller credit because the seller is trying to say thank you. Not in every case, but in a lot of cases, I'm seeing that. We push the fact that the buyer is a veteran when a lot of times I'll call the listing agent just to say, hey, this person's ready to go. We vetted them out. I know you see the commitment there, but they're a veteran. I make sure to say that, and they're really excited about the house. So won't cover your cost for closing, but it will cover your down payment.
Wonderful.
Does that
And
answer
in the
your question?
interest of time, I think it does. In the interest of time, though, we are going to go ahead and move on to DHCD. But if you have other questions, Steve is also going to be able to stick around, I think, to the end of the webinar. So if you have questions for either nope, for Nikki or Steve, please put it in the Q&A box. We will get to it after our next presentation. All right, Frank, take it away.
All right, people. Thank you, everyone. Thank you, Jackie, for having us here. Frank Bamonde with the Maryland Mortgage Program. And what you're looking at is our website. It is mmp.maryland.gov. We're part of the Department of Housing and Community Development. We are the Maryland Mortgage Program. Maybe you've seen some of or heard some of our ads on TV, on radio with the Ravens, with the Orioles. They may do it with the Nationals too. I'm not sure about that. So this is our website. So you can come here and you can learn about buying a home. You can find a lender by clicking on that button, unless you want to contact Steve directly. And you can also get referred to a realtor who's taken the housing opportunity certification, just like Nikki did. And we can refer you to a lender who knows about the down payment assistance programs available through the state. And you know, typically that realtor gives you 3 options. So when we refer you to a realtor, is a realtor who stated those 3 counties, whatever counties they happen to be. So we're not going to send you a realtor who, say you're buying a house in Western Maryland and your realtor only works in the Baltimore area. We'll send you to a realtor who's taken the class and is working in Western Maryland. So you have somebody who's familiar with the area and the community. The Maryland Mortgage Program is one of the tools the lenders use for funding. So we are a housing finance agency. We're part of the Department of Housing and Community Development. And our job is to provide liquidity to the market. So we have different programs that our lenders can use. And we have over 120 lenders in the Maryland Mortgage Program. And I wanted to show you our rates and some of our products that we have. MMP is a dual track product line. We have a first-time advantage side where you must be a first-time home buyer. But if you don't qualify as a first-time home buyer, you can still use the Maryland Mortgage Program on the MMP Flex side. Notice that the rates are higher on the Flex side than they would be on the first-time advantage side. So typically, if you qualify as a first-time home buyer, you can use the products on the yellow side of the rate sheet. And basically, your lender will help you and guide you through it. So you don't have to basically learn this stuff from us necessarily. You can just go through the participating lender that offers the programs. You can qualify as a first-time homebuyer in a couple of different ways. If you never owned a home before anywhere in the world, you are indeed a first-time homebuyer. If you haven't been on a deed in the past 3 years of a primary residence, you can also qualify as a first-time homebuyer. Say you're on the deed for your parents or your grandparents' house, but you don't actually live there, you're a first-time homebuyer. If you're a veteran or active duty military, we'll allow you to qualify as a first-time homebuyer with the first-time homebuyer's exception. And there's some paperwork the lender will complete for that. But so if you're active duty military or you're a veteran, you can also qualify as a first-time homebuyer. That's even if you own a home today. At closing, you'll come out of one property into the next, and you can qualify as a first-time homebuyer. And the last way you can qualify as a first-time homebuyer is if you're purchasing in a targeted area. And there's a mapping tool that the lender goes to, plugs in a specific address, and see if it falls in a targeted area. Targeted areas are a designation from the state of Maryland, from the federal government, I should say, under which that if you're purchasing a home in a targeted area, you can qualify automatically as a first-time homebuyer, even if you owned a home before, or you may qualify at a higher income limit. So you may be able to qualify for a house. So the products, the first-time advantage direct and the flex direct comes with no MMP DPA. DPA is down payment closing cost assistance. So these products assume that you either have your own money for closing cost assistance or you're getting your money from a city or a county. So you're just taking advantage of our lowest rate. And this is a rate with no points. None of our rates have points at all. So it's the lowest cost rate that you can get in the market possibly. And I'm going to say the lowest because I don't know that for sure, but it's very competitive. The 6000 series allows a partner match, and a partner match could be a city, could be a county, could be a community program. So if you work for an employer like a hospital, like Hopkins University, University of Maryland, University of Maryland college system, or the medical system, you may be able to get assistance from your employer. And if they give you $2,500, we'll match it with another $2,500. So you'll be getting $5,000 on top of the $6,000 here for down payment and closing cost assistance. That would also include a builder. So if you're buying a new home and your builder can give you $2,500, we'll match it with another $2,500 on top of the $6,000. We have the 3% product, has the same rate as the 6000 series. As you can see, the rate's the same. Our government rate is always going to be somewhat lower than the conventional rate. So you see here our rate for government would be FHA, VA, or rural housing. Those just tend to have lower rates in general. Our most popular product, believe it or not, is the 5% product. The 5% product gives you the most money that you can get possibly in down payment and closing cost assistance to be able to purchase a home. So say you're purchasing a home and the average price of a home, generally speaking, is probably around $400,000. So you're getting 5% of $400,000, you're getting $20,000 in down payment and closing cost assistance. That's a lot of money. Most programs out there do not give you 5% of the purchase price for down payment or closing costs. Our money can be used for both down payment or closing costs. In some cases, for some other programs, you get money for closing costs, but not necessarily money for down payment, or money for down payment, but not money necessarily for closing costs. MMP money can be used for either or. It's between the lender and you to figure out which way works best. The Home Start is a product for borrowers below a certain income limit, 50% of AMI. And you can find everything on the website, but really, if you go to Steve, he knows what the 50% of AMI means in a specific area. If we have time, maybe we'll go take a look at that. Specialty products we have in Montgomery County. We have the Montgomery County Employment Program. And this is a program, obviously, just for Montgomery County government employees. And they can get up to $50,000 non-payment and closing cost assistance. These are actually funds from Montgomery County government. They're not funds from the state. We just manage it for them. So that's a program that they have. And of course, we have the award-winning Maryland Smart Buy. Maryland Smart Buy allows first-time home buyers with student loan debt to be able to buy a home and pay off student loan debt. And the student loan debt piece that gets paid off is forgivable over 5 years. So at the moment, the amount's up to $25,000. It was just $20,000. It was just increased to $25,000. So imagine that you owe $26,000 in student loan debt and you're buying a home. All you will need is to pay off $1,000 of that student loan debt, and we will pay off the difference at closing. We have an option with no down payment assistance. Maybe you don't need the money from us. We have an option with $6,000 in down payment assistance. And if you're below 50% of AMI, just like Home Start, we can give you 6% in down payment and closing cost assistance on top of the $25,000 to pay off your student loan debt. The program requires that you live in the house for 5 years for you to get the full $25,000 forgiven. If you only live in the house for 2 years, 40% of it will be forgiven, 20% per year. So you have to be in the home for 5 years. The program will allow you to refinance in the future if you want to get out of this rate, if the rates drop, obviously. And as long as you stay in the home, the $25,000 will be forgiven over time. So those are the products that we have. And come July 1st, we may have additional products because July 1st is the start of our fiscal year. And we may get a couple of new products that come in. So keep your eyes out on the Maryland Mortgage Program website and take a look at our products. Income limits for MMP. Just want to go through them a little bit just to give you an idea. Income limits are pretty high. Most programs that you're going to find out there that offer down payment and closing cost assistance from a city or a county follow different income guidelines from the federal government. Our income limits are a lot higher than that. So if you're looking in the Baltimore area and you're a household of 3 or more, you can get up to 100. You will qualify for MMP even if you make just under 184,380. In the DC area, those income limits for a household of 3 or more, is 229,460. And these income limits should get updated fairly quickly because we're already like a month behind. So we're waiting for HUD to give us those numbers, and those should be updated. So chances are these income limits are going to be higher in no time soon. So those are the income limits for the Maryland Mortgage Program. And I wanted to see if I can get to the 50% of AMI numbers. Maybe look down here.
There it is.
Product
See it under
matrix.
financial tools and calendar.
Financial tools.
Go back.
Up.
Right there. Stop. Financial tools and calculator. Scroll
Oh,
down.
okay. All
Yep,
right.
right there. See 80 and 50?
Hey, I see it.
Cool.
I see it. Thank you, Catherine.
You're welcome.
All right. So she's like a maven on this stuff. So 50% of AMI numbers. So if you make under 165,150 in the Baltimore area, you can get 6% in down payment and closing cost assistance. Say you're in the DC area, the income limit there is 81,000. So it's a little bit higher in the DC area than it would be in the Baltimore area. So basically, if you make under 81,000, you need the Montgomery, Prince George's County, Charles County right here. You can get up to 6% in down payment and closing cost assistance. We also list the 80% of AMI numbers, and this applies to specific other programs with the department that are not open at the moment. But those numbers are listed in here. If you buy in a home and you're using our conventional products, this 80% of AMI number comes into play when you're trying to get a reduced coverage rate on your MI insurance And really, that's something that the lender will walk you through. Steve will definitely walk you through it. But it can be very important because if you're getting a conventional loan and you're below 80% of AMI in the DC area, it's 129,600. They may be able to reduce your coverage rate from MI insurance, mortgage insurance, from 35%, which is the statutory requirement, maybe all the way down to 6. So your MI insurance may go from $250 a month to maybe $75 a month. So that could save you a lot of money as well. So those are the income limits for the Maryland Mortgage Program. Other resources that you can have yourself right here. We have product fact sheets on every product that we offer. You can get kits in Spanish or you can get it in English. The MMP information kit is a good source. If you just want something basic that you can get your hands on and review it, this kit, you can print it. It talks about some of the products that we have, some of the stuff that we talked about a little bit, the income limits, the purchase price. Our credit score for MMP is 640. So you cannot be lower than 640 for any of our products. In fact, for a Smart Buy product, you need to be a 720. So that's the only product where you need to be a really high credit score, 720. But you're getting $25,000 forgiven over 5 years. So it kind of merits that kind of extra credit flexibility, ability to demonstrate that you have good credit. So our credit score is listed in there. There's also home buyer education that's required. I don't know if that's listed in here somewhere. I'm sure somewhere here. So home buyer education is another requirement for the Maryland Mortgage Program. And you must attend a class either online or with a housing counseling agency for you to be able to use the Maryland Mortgage Program. And you can go through one of these providers here online, or you can go through Housing Counseling Legal Services Network. These are funded through the department as well, not through MMP, but through the department. And you can get a list of housing counselors list for the whole state by county. So if you're purchasing in Baltimore City, would be these. Baltimore County would be these. Say you're purchasing in Hartford County, would be right here. Any county that you will need. I encourage you to attend a class. They offer it online, and it's great that you do it online. But sometimes when you go in person to a local housing counseling agency, you're going to get knowledge about local programs, down payment assistance from cities and counties. And those are typically not going to be covered on an online class from a national provider necessarily. They would just talk about housing in general or housing affordability, but not local programs. Really, if you want to know what programs are available in Baltimore City, who you want to talk to, send any of these housing counseling agencies in Baltimore City, because they would know about city programs, city products, down payment assistance that can be combined with the Maryland Mortgage Program. Like when we talked about our first time advantage, correct. Let me see if I can go back to
Hey,
damn
Frank,
it.
we are at time for this webinar this evening, so
Okay.
I want to
All
just
right.
go ahead. We have a question or two currently that I do want to
Okay.
make sure that we're able to have time to answer real quick before we all
No
go about
problem.
our
No
evenings.
problem.
Thank you so much. MMP is an outstanding program. If you guys couldn't tell, there are so many resources, and I highly encourage you, we all highly encourage you to get the information about those programs and how they might be able to help you get your first home. Um, Questions that we have in the chat for anyone on our wonderful panel of experts who would like to weigh in. Are first-time home buyer programs able to be applied with other first-time home buyer programs? Can
Yes,
you stack them?
you can stack them, but you just need to remember our income limits are higher than most city programs and county programs. So you have to meet the requirements of the most stringent program first. So if you're using down payment assistance from, for example, from Baltimore City, and they follow 80% of AMI numbers, you need to meet their requirements first. So you can meet our requirements, our income limits are higher, but if you want to use their money, you also have to meet their requirements. You understand what I'm saying? So, yes, you can stack them, but you have to meet the requirements of all the programs that you're using.
Wonderful. And I know Nikki so kindly already answered this question, but just to give it some time as well outside of the chat, what's the difference for anyone that is here with us today? What's the difference between closing costs and down payment?
And
Well,
that's a
down
great
payment is the
question.
money that's required by the loan insured to be put down as the minimum contribution from the borrower. For us, down payment and closing costs is the same thing for MMP, I would say, because our DPA, down payment and closing cost assistance, can be used for both down payment or closing costs. But if you go to a lender and you go to a realtor, they may have a different answer as to what's required. For example, when Steve was talking about a VA loan and what the seller can contribute for a borrower, for MNP, if they use a VA loan, they could just use our DPA for closing costs or down payment. Say it's an FHA loan, will contribute. In fact, I was just talking to a loan officer today who just did a closing in Salisbury, and somebody purchased a home and it was 250,000, and all the borrower needed out of their own pocket was $750 because all the money that went into the deal covered the closing costs. Ended up maybe there was some seller help involved too. I don't know all the details, but basically, if agency guidelines allow it, the borrower can get money that they pay for an appraisal, money that they pay for a home inspection, money that they pay for other things that were paid outside of closing. So, say they put even EMD money, which is your earnest money deposit that you put down when you first put a contract on a home. Say it was 5,000, maybe you get all of that back, or maybe a portion of it back. So, you may end up going to closing, and instead of you needing to write a check, you may come out with the $2,000 you need to buy that sofa that you wanted to put on a credit card. So, so I'm not saying it's easy. Nothing's easy. Everything takes a little bit of work, but if you're with the right realtor and you with the right loan officer that knows the products, they're the ones that are going to guide you through it. We're like more in the back. We just come up with exotic programs and ways to use down payment assistance. And our job, my job, and Catherine's job is actually to train the lenders, their staff, their underwriters, their processors, their closers, their post closers on how to maximize and be more effective in using the Maryland Mortgage Program, because we're keen to the fact that realtors want that 30 to 45-day close, right? And one of the drawbacks for a lot of government programs is that it takes a little bit longer to get them to close. But I can tell you that if Steve can get the loan approved in house and send it to us, we can approve it in 24 to 48 hours, provided that the package doesn't have any errors in it and has no conditions. So,
I can attest to that.
yeah.
Yay.
Exactly.
So, Steve and Nikki, can you guys talk a little bit more about the examples of kind of what makes up those closing costs then, to kind of also give a little bit of a clear understanding of what that difference is?
Yeah, sure. So I'll start and you can kind of jump in here. One of the costs is title. So you have to pay a title company they search the title, the history of the house backwards to make sure there's no liens, judgments on the house itself or the past buyer. They check to make sure like what the payoffs are for water bill, sewer, to make sure all that's completely clear before the buyer takes ownership. So Nikki, you can take a different fee.
Yeah, and then there's, I thought you were going to take lender fees.
Oh, no, no, no. Ours are so small, it doesn't matter.
There's recordation fees and there's taxes to record the deeds, to transfer the deeds as well. There's your homeowner's insurance too, that's included in that as well. Hopefully there is not, if there's like a back, well, no, that's not something they wouldn't pay, never mind.
All the
But
inspections.
the inspections, as
Inspections,
well, the
transfer
appraisal,
tax.
yep, the appraisal as well. All those are considered closing costs. And then obviously the down payment that they were asking about before, that's your skin in the game. You got to put a
The
little
other
skin in it.
the other big fee though is your escrows. So
Mhm.
if you're going to set up an escrow account, what that does is allows the mortgage company to pay your taxes and your insurance when that bill comes. So the bill is sent to you. Let's say it's a school bill and the school bill tax is $5,000. You'll get this bill and you'll panic because you think you have to pay it, but you don't realize that when you set up your closing, part of your closing cost was an escrow account designed to be able to pay that bill when it comes due. So you'll panic and call your lender. What do I do with this? I don't have $5,000. And I get to say, that's great. You don't need it. We've already paid that bill for you.
That's also something that you want to monitor too with your servicing company when you get those notices in the mail too, because they'll let you know how much that's going to be and whether or not your escrow account is actually going to cover it. So that sometimes will fluctuate your payments too, based upon what your taxes are, your home insurance requirements as well too. So watch it.
Yeah, and depending when you close on the house, typically every other year you're going to get it in October or November. It'll be the escrow letter, and it'll show a shortage or an overage. If it's
Mhm.
an overage, you might get a check back.
Got a
If
little
it's a
check. You get a little
shortage,
check.
then they have to readjust your payment going forward by by a couple of dollars. It's never going to be a ton of money, but because taxes go up, from time to time, and homeowners insurance goes up as well.
It's also across the loan too, the life of the loan as well too. So you have
Right.
to be mindful of that. You do have the option of also paying it out of pocket as well too, which I would suggest. So then what that way your monthly payment wouldn't fluctuate.
That's right.
All right. Well, I'm not seeing any more questions, and we are over time. So thank you all so much. Thank you all to our panelists, and thank you for your attendance. And as a reminder, we will have another Your Home Buying Keys webinar on July 9th from 6:30 to 7:30 p.m. Please share that date with anyone you think would benefit from this information or another soon-to-be home buyer in Maryland. We would appreciate and love any feedback you're able to give us about this webinar to help us make it even better for future home buyers. I'm putting a link to Google form. It's very short, I promise. And if you are willing to give us any feedback, we would love to hear it. And thank you in advance. Be sure to check out MarylandHomeownership.com for more resources and information on homeownership. And we're wishing you the best in your journey. And if you have questions, please email us at webinar@mdrealtor.org. Thank you all so much. Have a wonderful evening.
Have a good evening.
Thank you.
Bye.
Bye, everybody.
Bye-bye.